Hello and welcome to Kemet Capital, the community of holders and seekers of African capital. I'm your host, JS, and before we begin with today's reaction, we start with our word of affirmation. Our guiding principle is the Cobb and Douglas function, guys. On our way to make Africa great again is through economic power, economic might, and in order for us to achieve that goal is through efficient allocation of labor and capital. So today we're going to react to this research paper from the CFA Research and Policy Center pertaining to the total factor of productivity, which is the change in output, not from input. All right, guys, the summary of the article is here. I'm going to put the link in the below. So basically, the document titled Capital Formation in Africa, a case for private markets is a comprehensive report published by the CFA Institute in May 2025. The document explores challenges and opportunities related to capital formation in sub Saharan Africa, with a particular focus on how private markets, including private equity and private debt, can play a transformative role in funding the region's structural investment need. You guys know in this community, we advocate for Africa using its own resources, its own capital to foster its economic development and prosperity. So this research paper basically, I was able to highlight some elements. This is the summary of the research. I'm gonna, as I said in the beginning, I'm gonna put the link in the below. So basically, the purpose and scope of the research pertains to the analysis of barriers to capital formation across 12 African markets, which are Botswana, Ivory Coast, Ethiopia, Kenya, Mauritius, Nigeria, Senegal, South Africa, Uganda, Zambia, Zimbabwe, and West Africa as a region. The document emphasizes the role of private markets in complementing public, public capital markets and government funding. And some of the highlight of the research are the barriers to capital formation. Indeed, the report identifies several cross-cutting challenges, including limited access to capital for small and medium enterprises, high interest rates and inflation, weak governance and regulatory gaps, low investor trust and financial literacy, and develop infrastructure and market fragmentation, dominance of government borrowing, crowding out private sector access. And some of the policy recommendation from the document includes the regulatory clarity and predictability to encourage investment, public-private partnerships to develop infrastructure, investor education, and financial literacy programs. Because, as you know, guys, people on the continent are not fully aware of what is the role of the capital market and what engine it can be for our economic development. Also, some of the policy recommendation from the research paper includes the support for SMEs, those are small and medium enterprises, through targeted funding and advisory services. Also, the development of private markets via pension fund allocations and blended financial models. We have made a video recently, or a couple of weeks back, highlighting how sovereign funds in Africa, basically how they allocate their resources in terms of investment. Most of them, actually, a small percentage of them invest in private equity, which is, in my opinion, the engine or the driver of economic development because they focus on small and medium enterprises and also in productivity like innovation type of investments. Finally, the private market as a catalyst is one of the point highlighted in the report. It states that private equity and debt are seen as well suited for to Africa's long-term development needs. The report highlights the growing role of development finance institutions and impact investors. It also discusses the importance of local institutional investors, IG pension funds, as anchor investors. And also, the document includes country specific insights Each country chapters include like in economic and capital market data, analysis of public-private partnerships, challenges to capital formation, tailored policy recommendation, and a call to action at the end, with the report concluding with a vision for Africa's future, emphasizing regional integration, financial independence, and infrastructure investment, advocating also for the African Continental Free Trade Area and the Pan African Payment and Settlement System, PAPSS, also encouraging development of local capital markets and cross-border investment platform. So what I want to do with you guys right now is to listen to some of the authors of the Capital Formation in Africa report. So there's a bunch of them. Those are not all, but those are actually those who lended their voice to the public, as we're going to share with you guys. So out of all of this, we're going to select three from three regions, and we're going to start with Malik Shehu from Botswana. All right, let's see what Malik has to say, and we are going to react as we go along.
I believe a number of people can take advantage.
All right, guys. As a disclaimer, I received this report as I am a member of the CFA Institute. I was at three levels, the last one from 2014 to 2016, and I'm a charter holder as of today, with my dues paid and my report filled. So we're going to react to those guys, which are fellow charter holders.
Of our research topic. For example, academic researchers can use this to write academic journals as well as also try and, um, implement certain policies in place. And speaking of policies, the makers of policies can also use this research to try and, deepen capital markets through their policies, improve investor protection, and just enhance the economy as a whole. Investors can also take advantage of this because it allows them to understand where the opportunities are as well as the bottlenecks. So, these are just three examples of people who would be able to take advantage of this research topic. Some of the key takeaways from this report is we found that pension funds are the biggest players when it comes to investing.
This is something that we're already aware of, guys. Pension funds are really the real holders of African capital at the moment, but they don't efficient way. So we're gonna let Mr. Malik and Shehu continue to discuss.
In both the public market and the private market. We also found that when it comes to private equity investing, private equity managers prefer to go for medium and large enterprises as opposed to the smaller companies, which means that they don't really necessarily dabble in venture capitalist funding. So this creates an opportunity as well for VC funds to try and tap into the smaller companies within Botswana.
Hey guys, for those of you who are not aware, venture capitalist fund, it's basically a private equity funds that invest success. So at this stage, as a venture capitalist, you don't really have, as a company, a market yet. You're still in the development phase. So investing at that time is very risky, I should say. So the investor obviously will ask for a higher return, but that also this stage of the investment process, or this stage of a development of a company, it's where innovation happens, guys. And who says innovation says increased productivity, because as you innovate, you become more efficient in what you do. So this is basically the sinews of war right here: venture capital investment into the continent.
Another thing we found was that government debt is the largest, and this is then followed by corporate debt. Some of the key findings as well would include the fact that Botswana is still a young country, so it doesn't have a lot of instruments or asset classes that pension funds or investors can invest in. So it's still growing in that space. And due to the recent PFR2 rule that has been put in place, we have now seen that the pension funds or institutional investors can now expose themselves to asset classes such as infrastructure. So there is still some developments in the country as Botswana is still young and is still growing, and there's a lot of opportunities that can be taken advantage of. Well, some of the key practical applications suggested by the paper
And guys, just to reiterate, this is one of the first of the kind, like a research paper that goes in depth into actually what are the challenges that we face in sub-Saharan Africa in terms of capital, attractivity. So I was very pleased when I received the email and the telling me that the research was just published. Very excited to share with you guys as well because this is actually what this community is about. It's about African capital, and to hear that from a reputable institution like the CFA Institute, actually, I'm glad to see fellow African holders and seekers of capital right now discussing our issues and looking for solutions for our development and our future, our prosperity. That's what it is about right here in this community is for the prosperity, the development, and the enrichment of the African people.
would be to improve the private capital market space so as to hopefully subsequently improve the public equity space, because right now the public equity space is quite illiquid. There isn't a lot of stocks that can be bought. So by helping private markets or private companies grow, hopefully in the future they can list, and this allows opportunity for institutional investors like your pension funds to find new money, or rather, sorry, new stocks to put their money in as well. So help the private market also helps the public market. Another key finding that can be applied here would be the development of new instruments, because we have the traditional ones, your equities, your bonds, your cash, your real estate, but we can do better. Agriculture is a big thing in Botswana, so let us create instruments around commodities such as agriculture, or let us create instruments around property as well, like your REITs. So the practical applications of this paper would be to draft policy that can enhance capital markets by also developing new instruments.
Right, guys, that was Malik Shehu, CFA from Botswana, and very interesting comments that he made, specifically concerning the lack of financial instruments. In my opinion, all agricultural commodities should be denominated in an African currency. We should have the most prominent um, commodity market in the world should be somewhere in Africa, either Ethiopia, Nigeria, South Africa. Pick a country on the continent. It has to be coming from us because we have as a continent, the agriculture is represent a larger share of our economy. So we should be the leaders on that front. So create more instrument, futures, forwards related commodities. The REITs, he mentioned REITs as well when it comes to real estate and other property, physical assets. So great insights from Mishek, from Malik Shehu. I'm confused with Mishek that we on the rating agencies, African rating agencies. So we're gonna listen to another professional here, one from Nigeria, which is more Central Africa. So we did South with Botswana. We're gonna do Central with Nigeria and finish West with Ivory Coast. So we're gonna hear from Dr. Patrick Omoruye Eke and see what he has to say.
All right, our audience for the work done on capital formation in Africa are government officials, SMEs, captain of industries, investors generally, and Nigerian public. Being that the role of capital formation in Africa or in Nigeria is germane to poverty reduction, to employment, improving employment, welfare, and the World Bank has always insisted that Nigerians' development has been slowed down by lack of by problem with institutions, infrastructure, and finance in that order. Thank you for this privilege. Our takeaway on this project is that government must address the issue of ease of doing business in Nigeria. Um, that means that there must be friendly policies, encouraging policies for foreign investors, diaspora investors in Nigeria, SMEs. The capital market is there. There are a lot of room for SMEs to raise funds from the capital market. There are a lot of products for them to raise funds on. That's we discovered that. Again, the COVID-19 period was a period when there was economic meltdown, so it affected our capital market development. And without good savings, there can't be adequate savings. There can be more capital formation, and there can be infrastructure. And infrastructure is key to development. Thank you. The key practical application of this paper are in two folds. First, the process and method of raising funds in the private market have been well spelled out in the paper. That is, through private equity investors, angel investors, high network individuals, equity investors. Those are they are there. And then the challenges there in the market are clear. Government unfriendly policies are there that's slowing down entrepreneurship and all the rest for investors, both foreign and local. Issue of culture, issue of the size of the market, the awareness is very low, and the issue of savings culture in Nigeria and others, as spelled out in the paper. Thank you.
All right, guys, that was Dr. Patrick Omoruye Eke. So he mentioned that the need for Nigeria to um, improve the capital attraction in terms of savings, in terms of the promotion of savings, encouraging the population to save more. But we also discussed recently in this community how the new Nigerian government actually already implemented some reform on the sector of on the monetary sector, on the currency sector. So now that we know that now Nigeria is a managed float currency, which is a notch below free float, where the currency fluctuation in value is dictated by the market itself. Now, right now, they're in a managed flow where the market can dictate the price of the currency, but there is some government intervention that are available to them in case of crisis. So we can, all in all, we can say Nigeria is already trying to put those policies into place in order to foster a stronger capital markets. And as you mentioned, we have to be able to develop our capital market sector, to develop to increase the literacy, as the report said, you know educate the people, educate the population in terms of how important it is for them to save, and what those savings can be allocated towards. All right, guys, we're going to listen to a final intervention. This time from West Africa and Ivory Coast, from Patrice Nguessan. Let's see what Patrice has to say, and we'll react as we go along.
Notre étude porte sur le développement du marché des capitaux dans la zone UEMOA. Elle fait un focus sur la Côte d'Ivoire et le Sénégal et se penche sur le rôle critique et essentiel que joue un marché des capitaux dynamique et brillant dans la promotion du développement durable, la mobilisation des ressources, l'investissement et l'accélération de la croissance économique. Cette étude
All right, guys, apologies. It's in French. Fortunately for me, I'm bilingual, but I'll try my best to kind of give a summary of exactly Mr. Patrick Nguessan is mentioning here in his interview.
qui analyse plus spécifiquement les axes de développement des marchés privés dans la sous-région UEMOA donne des pistes de réflexion à l'attention notamment des décideurs politiques, des autorités de régulation, des investisseurs et aussi, de façon plus large, de tous les acteurs du marché des capitaux de la zone UEMOA. Notre étude fait un état des lieux du marché des capitaux de la zone UEMOA. Malgré le vaste potentiel économique et financier de la zone UEMOA, son marché des capitaux reste encore très peu développé. Parmi les défis, notre étude relève le manque de profondeur, donc le manque de diversité dans les instruments financiers offerts sur les marchés, le manque de liquidité du marché, qui fait que les intervenants ne peuvent pas rapidement et au prix souhaité exécuter leurs transactions, les obstacles réglementaires et structurels qui entravent les investissements transfrontaliers, l'accès très limité au financement à long terme, par exemple, pour surtout les PME, le risque souverain ou donc politique qui décourage des investissements internationaux et réduit la base d'investisseurs en limitant aussi l'expansion et l'efficacité du marché. Pour dynamiser le marché des capitaux de la zone UEMOA et libérer le potentiel économique et financier de la zone, notre papier propose quelques pistes, notamment renforcer l'infrastructure du marché pour en améliorer l'efficacité et la liquidité, harmoniser et étoffer le cadre réglementaire pour attirer et améliorer les investissements transfrontaliers, accroître la diversité des instruments financiers offerts sur le marché par l'innovation, accroître la participation des acteurs du marché, donc des investisseurs, en tirant parti des fonds de pension et des compagnies d'assurance, et puis promouvoir l'éducation et l'inclusion financière pour approfondir l'engagement des acteurs sur le marché.
Right, guys, that was Patrick Nguessan. So basically, he highlighted some of the points already mentioned by the other professionals here. So it's the lack of financial instruments in the market, the lack of liquidity in the market, also uh, the scarcity of investors. And one of the solutions are the general solutions that we already mentioned in the introduction, which are educating the people, uh, making them aware of the importance of capital markets. Also, he highlighted the challenges that are structural and regulatory uh, facing the industry in general, the lack of infrastructure, or the basically the infrastructure needs to be improved for the sector to develop and grow. And yeah, so interesting comments from all of those guys. I'm not going to listen to all of them with you guys. I will put the link in the description below so that you can go at your leisure as well. I'll also put the description of the report itself so you guys can have a read. Interesting read, definitely for this community. I think it's relevant for us to be aware of this report. Very very well done. You've heard from the professionals; those are well thought of guys. They know what they're talking about, and they are actually um, positive about the future of African capital markets. All right, guys, we're coming to the end of this video. Let me know what you think in the comment. I enjoy reviewing that with you. As I said, all the links were going to be dropped down below. So feel free to have a look, and I'll see you at the next one. Bye bye.